Hi, everyone, and welcome back to another show. I'm here with Matt, the founder of ORATS, an options analytics platform built on top of over 15 years of historical options data. Our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. Today on the show, we're going to be discussing how to scan for double diagonals and other complex orders. Matt, do you want to share your screen and get us started?
Sure. Again, if any of you have questions, this is a question that we get a fair amount. There's no easy way to do this, so there's some settings that you have to learn. But if you have questions on our stuff, we could be reached a number of different ways, including our community. So I'm going to be working off of our new dashboard, Tyler. It's in beta or almost beta. And this will probably be the look that most people will be seeing soon. So, and we're testing it. So let's test on it. So to get to the scanner, you go to the scan, and then there's an option scanner. There's a stock scanner, and then we have templates, and then you could also save your own scan. So that's what all of the tabs are above. So what we're going to be doing is building a custom scan. So you could add strategies that are here, but if you don't find your strategy there, then you could add a custom one. And so we have 4 legs. You could choose 3 legs or 4 legs, and add your custom strategy. So it's not easy. So you could also go to the option scan templates and see, here's a double diagonal for earnings. We've named some of these. For example, you could use that one, or in my option scans, I've saved reverse iron condor, a put calendar with long deltas. Like, some of these are not typical strategies. And so you could build these strategies, up to 4 legs, and then be able to back test them and see how they work. So, the best strategies aren't necessarily the old standby strategies that traders have been using for a long time. You could do it this way. So let's just see here. So I have I think this is named incorrectly, but this is just a typical 1x2 put spread, and then I have various deltas. And I didn't need to make any settings, so if you go below, you could set different variables. Like, you could set how much you want to pay for this particular strategy in terms of the stock price. So it's a handy tool, or just an absolute amount you want to pay, or the delta that you want to trade it at. So you might have delta ranges that you have in your strike deltas here, but then you would say, well, I want my spread delta to be this, even though those are the constraints above. And you could also set how wide the market is. So this is an important one where you probably don't want to trade it in things like over 1% or 2% or something. And then there's also a theoretical price difference. So as many of you know, our theoretical price is calculated off of a skew. So I'll just kind of look at what that is real quick. So ORATS, one of the big things that we do is we create this kind of orange line, which is a theoretical price. And you can see what the theoretical price is versus your options, and it's often very close. Some of these less liquid underliers, you may want to set a range, like you don't want to get too much edge, because I could tell you that a lot of our theoretical values match up to what you're going to get in the market. So you're not, like, if it looks too good, you're probably not going to get it, which is to say, like, if you're getting a lot of edge versus our smooth market values, the market makers know about that, but sometimes there are wide markets in the mid price. You're not going to really get those. So sometimes you want to set how the theoretical price difference. Now, the main settings, especially for like for a calendar or something like that, are the DTE differences. If it's blank, then it's, you know, the same DTE. Most strategies are the same DTEs, days to expiration. So, but if you get into calendars, then you'll have a difference, and you can set what that min and max difference is. And the way ORATS works is it's always leg one minus leg two. So
Maybe you should can you pull up a calendar strategy there to see what it fills it in as?
yeah. So here's a long call calendar, and then if we go down, we see that there's a minimum width. So the first leg minus the second leg. So the long call minus the short call. So the long call is usually the one that's farther out. Is 2 days in that case. And then also you'll notice that the strikes are the same. So in a typical calendar, and then we're getting some results below, you'll see that the strikes are the same. And you'll see also that the long is the September and the short is the August. So the you know, and then if I click on it, I could see that clearly more days in the long and fewer days in the short, and the price of those, etc. So, you know, that is something to look at right there.
Yeah, it's interesting. The DTE diff and strike width. We get a lot of questions on that. You know, people are asking what to set it to and all that.
Right.
So yeah, it's good to get those things right. If your strategy is not looking the way you like, the results aren't looking the way you think they should look, it probably has to do with the leg relationships.
Right. Yep, absolutely, Tyler. And then you might say, well, why I don't want to have this in the money. You know, I'd rather trade it out of the money. Well, then you could set your deltas down. So I'm just going to put them down, and then, you know, then they're out of the money. So, you know, that's how to do that. And then, you know, so that's the DTE difference. And the strike, and you could also say, well, I don't mind if my strikes widths are -10 or +10, right? So they could be off. So now what we'll see in the results is that here's one, the best one is 6150 versus 6160. So that will set these off. Like, again, it's leg one minus leg two. If I set it to 0 and then 10, then it's, so the long minus the short will be more. So that's what we're seeing here, 55 minus that one. If I did it the opposite way, if I did -10 and 10, or at 0, excuse me, then we'll see this the opposite way. So this is now 6145. So the leg one minus leg two is negative. So leg one minus leg two is negative. So leg one minus leg two is negative. So that's how that works. And so that's very important to understand, especially when you're doing, you know, a calendar or, you know, like a double calendar. It does get confusing. So
yeah. Well, that's why we have the templates in there for a lot of these things. You know, there's 13 templates in there right now. Maybe we'll add more after this episode, but it's a good starting point.
Right. Let me do that double. Here's a double calendar. This is an example of the option scanner using the stock scanner to find stocks that have earnings coming up and it's liquid and fairly valued. You know, so I just want like a normal earnings stock, and there aren't that many right now because it's not earnings season, but there's still some stragglers out there. But I want to find double calendars. You know, there's obviously, or not obviously, but there's often a pronounced skew in the front months versus the back months, and sometimes they get it wrong. They pronounce it too much, and then, you know, we'll see it in our forecast, or I like to look at the forecast. The distribution percent does not include earnings in it. So I ignore the distribution during earnings, because the distribution is just a distribution of stock price changes over the life of the stock. But with the forecast, we do consider what the normal earnings moves are. So that's the one I really look at, in order to come up with a double diagonal for earnings. So I would minimize this, and as I have it here, maximize the forecast. And so I want to see a big forecast. So I would see something like this, for FDX, and so what you're seeing, and then what I like to do is then look at this, in the trade builder, for example. So you could see that, like, so what the trade builder is, what we're looking at is a graph of the stock, and from the middle, we're all these are expirations and strikes. So this is the at the money, and then as you go out of the money, so this is that double calendar look, and this is it's actually a double diagonal, Tyler, because a double calendar, the nomenclature is that usually when you say calendar, that's an equal strike. When you say diagonal, means that you not only are having different expirations, but you're having different strikes. So they call that a diagonal. And in this case, we want to be selling the meats and buying the kind of the outside for these diagonals. And so what we're trying to do is sell this. Look at how high this is. Sometimes it's valid, but sometimes, like in this case, our forecast is lower than that, and so we're saying that this seems like a kind of when it's yellow and red, this is more of a sell than the other ones, and then we're buying some outside and up premium. Everything will come down to a certain rational skew, which we present, in the outlook, for example.
I love looking at that trade builder graph visually.
Yeah,
Because
that's such a good idea. I mean, that's why Trade Builder is one of our best tools. Is that we have that. But like, here's that expiration skew, and I think it was the June 27th that we were looking at. And then if you so that's the one down there. But then so here's the term structure. If you take earnings out, it's still pretty high. So usually what you'll see is when you take earnings out, it'll move kind of low. It'll, like, all of the options will be something like this. But in this case, FedEx is so high that we're well, there's a lot going on with FedEx because of the tariffs and the international trade and everything. So there's a jacked up volatility. This is backwardation or reverse contango even after you take the earnings out. But like, look at it, goes from 35, up to almost 100. So, and they're probably going to announce some stuff. So it's going to be a pretty active stock. But, I didn't mean to get so far into the earnings look, but, earnings and then you could look at this. The implied earnings move 7.1%, usually 6.6. The actual moves usually 7.1. So they're kind of getting it right, but you might say, well, why is the implied earnings move only 7.1 and the front vol jack so high, right, Tyler?
It is unusual behavior. Yeah, I'm curious what your answer.
Yeah, because again, we're not. There's a lot of underlying. So the thing that ORATS does real well, and I think a lot of other people don't do well, is they kind of assume everything falls down to a flat vol. But we're saying, our technique tries to solve for a rational skew. So we're solving for that rational, backwardation skew. So it's still very jacked. It's probably jacked like a 10% move, and I would guess that other providers do this aren't doing it correctly and are saying it's like a 10% move, but we're only dropping it to the rational skew, like that's still in backwardation 35. So that's a little bit advanced, but I think it's an important. Do you get what I'm saying there, Tyler?
Yeah, sort of. I mean, it's sort of Are you talking about like the constant implied volatility in the Black-Scholes model? Like that
So
people just kind of assume there's just constant volatility for things?
yeah, a little bit. So what I'm saying is, people will say, okay, well, how do we, the way that you get an implied earnings move is you say, well, one of the factors that goes into that model is where is it going to drop to after earnings? Like
Hmm.
where is the implied going to drop to? And then you figure out what that percentage is, and then it's a little difficult, but you could figure out like, oh, it's a 7% move, right? But
Yeah, that makes sense.
but they usually assume that it's going to fall to like a lower amount. It's going to fall to like 30, but this one's only falling to 35 because when we solve for this term structure, if you were to put this term structure, for example, if you were to like lower this one and lower this one and lower this one, it would,
Right.
it would be a very bumpy and irrational skew. Um, if you tried to drop everything and figure out what the earnings is for this particular earnings implied is. But again, we minimize the square difference, and this is the best line. It's not this line right here. This would be a bumpy line. So anyway, it's not
Yeah,
about
it's interesting. Yeah.
yeah. So that's what and so there's just a lot of FedEx is clearly one of the stocks that's most affected by all the BS going on in the market right now, and so it's going to have it even after earnings is announced. It's still going to have probably a backwardation or a front month that are higher than the back months because there's expecting more volatility than usual
Right.
in FedEx. That's kind of the lesson here, and that's kind of what we're seeing in FedEx. So anyway, so back to the scanner, the forecast deals with that. The forecast tries to figure out all that information and then put it out there for finding the best double calendars, for example, right now. Anyway, back to how do you set it up? So let's look at this. So in this case, so let's add a custom one. Let's say you were adding this. First of all, you could make your own name here. So that's kind of cool. And this follows down to here, and it also follows to your option scan. So I like to make this descriptive. And then it doesn't have to be, what did I do here? So add custom, you add your own name. And then you could set your days, is it 1 week, 2 weeks, 1 month, whatever. And so then you can say, well, like if you were setting this up, it doesn't have to be call, put, right? So it can be, like we have here, it could be put, it could be, call put again, and it could be, long instead of short, so this is,
Yeah.
I think,
We've
yeah, we did.
we've had a lot of people use this for like box spreads and custom ratio spreads. So that's
Yeah.
like a jade lizard and stuff like that. So like that's been the common use case.
Yeah, so like if it's 4 legs or less, you could really do a lot here. So this is really cool. But that then the gotcha is that you have to set, and I'll kind of scroll down here so you can set your deltas, right? But then you need to set, okay, so let's go here. So legs 1 and 2, they have the same DTEs, right? So you want them to be the same in this particular double calendar. And
Right.
as you see here, like, there's only 2 expirations, it's not 4. So you want 1 and 2 to be the same, 2 and 3 to be different, but then what's 2 minus 3? It's negative. So this has to be negative, right?
Yeah.
I didn't do that. I'm lazy. I just kind of set it negative 99.99. But you still get the good. You still get it the way you want it because you've set your originals. So it determines what your DTEs are going to be.
Right. Yeah, this is very very cool what you can do with the custom drop down there. We got about 10 minutes left, Matt. Do you want to go over how the stock scanner sort of integrates into the option scanner? That's a very common pattern of people going from one to the other, especially when you don't have a specific stock you're trying to look at, but you want to analyze stocks that have earnings coming up, or you want to analyze stocks with low volatility, or stocks with a certain slope, or that kind of thing.
Yeah, definitely. Thanks. So yeah, you could tell we've named this earnings liquid fairly vol. And if you go to stock scanner, you kind of, this is your blank slate, and you could get fundamental price volume, all these are different. You could paste in your own list. You could do a lot of things here. These are different, like this is diamond. So there are 30 stocks here. There's IWM, so 2,000 stocks there. So these are all the components of these. So you could, if you're just looking for a sector, this is a really good way to do that. But what you're saying, Tyler, is you can make a lot of settings, and one of the use cases, yeah, is earnings. So I could say, well, earnings fairly valued is one of our templates that we use, and so I could just click on that and bring that up, and as you could tell, FedEx and the rest of the stocks that we saw are in there, and so this name, you could go to the option scanner and then drop down in the stock scanner portion here. I'll just do that. These are all the ones that you have saved, so it's really cool. I have a lot, but it could bring in lists, so it's very, very handy on that part. And you could do a ton of things because we also have custom indicators where you can do singles or ratios of 700 indicators. So it's 700 divided by 700. So there's, how many different ones is that, Tyler? 50,000 different.
There's a lot of different ways. Yeah, a lot of different
Yeah.
indicators, a lot of different ways to combine them.
Right. And you can do a ratio to the best ETFs too. And then, so like a typical way to use this is like go to earnings. And so, weeks until earnings is greater than or equal to 0. And the average move percent isn't crazy. And then I usually go to the volume, and I want the average volume over the last 20 days to be over 1,000. So that's my typical kind of, like there's a fair amount of earnings going on there.
Yeah.
And, the earnings moves aren't crazy. There's a fair amount of liquidity, and earnings is coming up. So I'll just say something quickly on the, we don't publish for a download earnings, because that's something that we sell and something that we pay a lot of money for and is sold in the market for a lot of money from old Wall Street. Horizon was now bought by the Toronto Stock Exchange. So we actually sell that, but we can say weeks until next earnings. That's the reason it's a little bit obtuse. So that's one, and then I want a minimum stock price because I'm going to do some calendars, and I don't want like a really low priced stock when I look at it, and I don't want a crazy volatility stock. I want a stock that where people focus on the earnings. So this is something that I don't want a hugely volatile stock for some other reason. I could also pick a sector or not, or have sectors that I don't want in there. So if I don't want healthcare, if I don't want utilities, I could say between 3 and 9 or whatever. So that's pretty cool to get the right sectors, because sometimes if you get a biotech, you don't really want that. What else do we got in here? Weeks until next earnings, and the average earnings move. So this is so the absolute earnings move. So we have this thing called the absolute earnings move, and what we do and what you've done, Tyler, in making this is you kind of calculate what's the normal earnings move. What's 50-50? It's about 4%. And then, but the 10%, do you want those? Like there's some out there that move a lot during earnings, but I want just something kind of a little bit higher than the median, but like right around there. So I just kind of picked that to get. I want stocks that are kind of normally valued, normally, just have some liquidity, but then I want to be able to find. I want the scanner to like. I sit there sometimes and just wait for a good trade to come in to the scanner that is looking for an outlier. Like I think that like that FedEx could be kind of an outlier one because it's so jacked in the front. Above and beyond what our forecast is. So that's how
Oh
I
yeah.
kind of use. That's how I use. And then with the stock scans, there's other stock scans too. Like there's I like to buy cheap. I always like to have cheap puts and calls on stock. So here, how do I find those?
Mhm.
I look at our forecast divided by the implied volatility. Sometimes I want dividend stocks. Like sometimes I want calendar, so I want low contango, so or high contango or whatever, or low contango meaning backwardation. So like FedEx would be a good calendar stock. So like even without earnings. So hard to borrow. Like you could identify so many different types of stocks. So like I think the bottom line is ORATS scanner is so powerful, like for finding the symbols that you want and finding the exact kind of setups that you want. And what I always encourage people to do, including myself, is to like every you can make it so everything that comes out in the scanner should be a tradable thing. If it's not tradable, why isn't it tradable? Then you could set these parameters. You could say, oh, this is way off the smooth value. So, well, I have my smooth market values plus or minus 2%. So it's always near the market. And then I have things like a reward to risk. I don't want there to be too much risk involved in this trade. I don't want the delta to be too far. This is the double calendar. I don't want the delta to be leaning one way or the other. I don't want the ask minus the bid absolute to be too much. I don't want the market width to be too much from a percentage standpoint, and I don't want the price to be too high. So you could set all those. So every trade you see is basically tradable. So I think that's a really cool thing to look for.
Yeah.
And that's what the
Yeah.
option mechanic
I
can
I
do.
think you make a good point there. Like there's no point in having this just spit out trades that you don't want. Like there's enough filters and enough things that you can do to make this so that you're really only seeing tradable things. And you said earlier, like sometimes you just wait around. I
Yeah.
think that's an important thing to keep in mind. Just be patient when looking for trades. Don't put anything on that's just not exactly what you want, because there's a lot of stocks, a lot of options out there, and these are the tools that allow you to filter down the whole universe. So
And how cool is this, Tyler? You could say what's the minimum open interest
yeah.
or the minimum volume has to trade today or something. So
Oh
that
yeah, it's great. Yeah.
yeah. So there's just so much in there, that we've worked on to get it just right. So because you want to say to yourself, why aren't you trading this? Like, okay, well, it's because this. I go, okay, we'll filter it out. Why are you trading this? Well, I don't like that stock. Well, what don't you like about the stock? Oh, it's too lowly priced. Didn't have a minimum thing.
Yeah.
Keep asking your questions. I don't like dividend stocks. You can filter those out. You could there's a filter for that or whatever. So
Yeah.
we make it this way for a reason, and you want to make it. You always want to spend the time on the front end, and then so when you're trading, you could come and do your trading and not have to worry about a lot of these filters that you've set in the past. So that's what I think is a really cool thing about all this that we've built, Tyler, and the scanners and such. So yeah, we wanted to have a webinar on that this week and explain and answer questions, because there's a lot of power. I mean, granted, you have to learn some things, but you have to work hard to make money. You're going to have to
Mhm.
work hard to make money in anything you do. You might as well, use a tool that, if you spend the time, you're going to really find the things that you want.
Yeah. Yeah, it's great. And we're improving the paper trader, and we're improving the ways that you're going to be able to forward test these strategies along with back tested strategies and the optimizer. So all this is getting improved, and you guys are going to be able to have access to this beta version in the coming weeks. So just shoot us an email, support@orats.com, if you guys are interested in trying this out. We have a lot of stuff improved and new stuff in the dashboard as well. Yeah, this sounds great, Matt. I'm looking forward to demoing more of this more of the new features in this beta version in the coming weeks. So.
Yeah, no, it's super powerful, and then we didn't even, we talked about before the trade journal and all that, but like, I could just put these trades on, and then be able to go and review how they did, and look in the trade journal and see how and why we're making money, and then you can see that like certain types of strategies that we have on, and where you're doing well, and so it's very cool to be able to use all these tools, Tyler.
Yeah, it's great. All right, thank you, Matt. Thank you, Tradier, for letting us on again, and we'll be back again next Tuesday at the same time. If you guys have any questions, email support@orats.com. You can also ask in our community. If you're a member of ORATS, if you have a subscription to the dashboard, you can ask any question in our community tab. And we have 60, 70 people there that have used the dashboard, that are using it often, ready to reply. So that's a great spot to do things. Cool. Yeah, if you don't have anything else, we'll see you guys again next week.
Thanks, Tyler.
Thanks, Matt.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.